All right, well, welcome in today. Today's topic, what we're going to talk about is being a passive investor or an active investor. And the reason why I want to talk about this today is I think there's a lot of confusion around when you get into a multifamily deal. Is it really passive income or is it active income? And I just want to give you clarity on that. We've got a few hundred people knocking on the door, about 400 people in this school community. And I ask you guys when you come in, what are your challenges and what are your goals? And more often than not, people are saying, I want to create passive income. Well, I want to clarify for you through the course of this webinar what actually is passive and what is active and what does that mean to you. So today, I'm going to break that down exactly for you. I'm also going to talk to you about the 4 jobs your investment portfolio should be doing for you, a side-by-side comparison of what it takes to be a limited partner or a general partner. We're going to take a look at the pros and cons of each of these. So first of all, why real estate? Why would anybody want to invest in real estate? And the reason why we'd want to do that is because real estate is a fantastic investment. I like to think of it as an alternative investment. And the reason why I say it's an alternative investment is because it's not your traditional stocks and bonds. And when you're investing in the stock market, the only way you can actually get money out of the stock market is you have to sell stocks. Well, that's not the case with real estate because people are paying you rent, you're paying your expenses, and at the end of that, you have cash flow. So it's a beautiful investment that provides you cash flow. And at the same time, it also gives you appreciation. So if you buy real estate and you hold on to it or you force appreciation, then the value goes up. And it's also a tax deduction. So, beautiful thing about apartment investing as opposed to stocks. Stocks, you have to pay taxes on either before you invest or after you invest in the stocks, depending on if it's a standard 401k or a Roth 401k or something like that. But regardless, you're going to get taxed for sure. Whereas with real estate, especially in multifamily, you're buying and selling businesses and it's real estate. So you get this nice tax deduction. So you pay less on the money you make and you get to make more. But along with that, just why are we investing in real estate specifically? I want you to think about this. Your investment portfolio really has 4 jobs. If you're investing money in real estate, it has 4 jobs. The first one is to protect your income from inflation, and that's something that real estate definitely does. You want long-term growth. You want to have this long-term growth strategy, and a lot of that is to outpace inflation. You want to protect your purchasing power. So that means as things go up in cost, you have the money to do that. Your money isn't losing value, and you want to you want to reduce your risk against things like volatility in the stock market. So your risk reduction or hedging. And so if your investments are doing that for you, then you've got a very well diversified investment portfolio. So I just want to get that out of the way. Like, why real estate in general? Well, here's why, and it just says so many things for you. Um, Now, I talked about this in the last session. I'm not going to go through this in a whole lot of detail, but you can, when you get into apartment investing, and some people don't even know this, but you can actually be a passive investor, meaning someone else goes and does all of the work, or you can be an active investor. And either of them give you great returns, but one gives you better returns and one gives you smaller returns. So, I said, I'm not going to go through all of these, but if you're a passive investor and you invested in a deal, this example, it was a 80% return on investment over 5 years. And so that's about a 16% average annualized return, much better than the stock market. You invested 50,000, you'd get your 50,000 back, plus you'd make another 40,000. So that's a pretty standard return on investment for a limited partner. Now, if you were a deal sponsor, what you would get is a whole lot more, but you're also doing a whole lot more work. And that's what I want to explain to you today. And also, you're going to be sharing this with partners. And so, this is also if you made a $50,000 investment, but you'd really only back out 50,000 here, so it'll be 835,000. So big difference here when it comes to the amount of money you can make in a deal. But it doesn't necessarily mean that you should be a deal sponsor, a general partner, or a limited partner, a passive investor. So I'm going to walk through which is really right for you and help you make the best decision. But real quick, if you've never met me before, or never worked with me, my name is Stephen Lee Thomas. I am a multifamily investor. I am a business coach and entrepreneur and a podcast host. And actually, we just had a podcast that we uploaded into the school community. I think it was yesterday. A really good interview with Michael Volgarakis. And so if you didn't get a chance, watch that. It's got some good insights there. Also, a little bit more about me and my partners. We've invested in about 16 deals, 16 apartment deals. These are large deals. About half of them have gone full cycle and given pretty good returns for our investors. So we've done this several times, so we kind of know what we're talking about here. But let me stack these up for you, the side-by-side comparison of passive investing, that's a limited partner, versus active investing, that's a general partner. So I also want to frame up what I'm talking about here is what we call a syndication model. And a syndication is just a fancy way to say, as a general partner, as a person going out and finding the deals and structuring the deal, I'm not using my money or all of my money to acquire the deal. I am raising capital from people. And that is where we get into this concept of alternative investment. So, yes, I actually started passively investing in apartment complexes before I got to become a general partner. And what was great about that is I was very busy in my corporate career. I was starting my family. We had had a child. We had another one on the way. So I was busy changing diapers and I was getting mailbox money. So for me, it was a fantastic opportunity to be a passive investor in somebody else's deal while I got to learn about it and get a lot of the benefits from it. Then, as I was able to settle things down in my personal life and dedicate more time, I was able to move over and become a general partner. I was going out and finding the deals and underwriting the deals and raising the capital and doing asset management. Okay. So each of them are fantastic options. Some are, one is very involved and one is not as involved. So what I'm going to do is I'm going to break down the different pieces of this. We're going to talk about it as you're a passive investor or a general partner. So the first one here is your time commitment. If you're a passive investor, your time commitment is honestly next to nothing. The only thing you really need to do as a passive investor before you make that first investment is I encourage you to educate yourself. I think you should be able to understand the financials, and they're not very complicated. I think you need to be able to have an idea of what's going on in the underwriting and ask some good questions regarding the underwriting. So there definitely are some things that you need to learn, but really it's very, very little time commitment. Once you make that investment, you're just kind of reading emails that come and going and looking at your bank statements every time we make a distribution. If you're a deal sponsor, your time commitment it's pretty involved. You've got to go and make relationship with brokers. You've got to underwrite deals. You've got to submit offers. You've got to work with vendors like insurance companies and mortgage brokers to get the quotes together. You've got to be submitting offers, and once you get an offer accepted, you've got to raise capital, and you got to work with attorneys and the lender to structure everything. And then once the deal is closed, you now have the asset management piece. Now you're hiring a property management company, but you're still managing the asset. So getting into an apartment complex as a general partner, it is not a passive type deal. Like there is work to be doing it. Now you can absolutely do this while you're working a full-time job. I did it. I know a lot of people who do it. You can do this. I'm not saying it's an additional 40 hours per week to get a deal, but I want you to understand there's a difference here. Now, let's talk about risk and responsibility. As far as risk and responsibility as a passive investor, it really is on the lower side. You're doing the investment. There is some risk to it, but really it's all on the general partner. It's the person who's driving the ship, and they're the one who's out there making the decisions and making sure that everything is going the right way. When it comes to control over decisions, as a passive investor, you get a vote from time to time, and that would be if the general partner said, "Hey, we need to go back to our passive investors. It's time to refinance or sell." That would be a decision that would go over, and you guys would vote on it. Now, who is the property management company going to be? Who are the vendors going to be that are doing the rehab at the property? Um, do we need to increase rents? Do we need to do any incentives to get people at the property? There was some type of an issue at the property. There was a break-in at the property. Who's handling that? Well, as a limited partner, you don't deal with any of it. That all falls on the general partner as part of the asset management. When it comes to returns potential, I put moderate here because you can actually make pretty good money as a passive investor. Pretty close to double what you can make in the stock market with really little to no effort. So you've got great returns there. Um, the general partner, you definitely make higher returns, but you are putting in the work for that. As far as a capital requirement, and I've got another slide that shows more detail on this. Um, as a passive investor, you got to have money to bring to a deal. You cannot invest in a deal with no money. It just doesn't work. However, as a deal sponsor, you may be able to actually get into a deal with little to no money out of pocket, but it does require that you're out there fundraising. And then overall involvement, it is completely hands off when you're a limited partner, and it's as hands on as it can be when you're a general partner. So that is just a quick side by side comparison of being a passive investor versus being a general partner. So I've been talking about this concept of limited partner versus general partner. So I'm gonna break that down in a little bit more detail over the next couple of slides. So, what is a passive investor? This is what we call a limited partner. Now, you're definitely a partner in these deals, but you are a limited partner. You essentially are buying shares in this deal. So, you have your piece of the apartment complex that you own, and that's why you get to take advantage of things like the depreciation and the tax write-offs because you technically are a part owner. So, you invest in the real estate without any direct management. You earn returns through distributions and equity appreciation. So we typically will, after the first 6 months, we'll do our first distribution, and then we try to do those quarterly. And then that's the cash flow piece. And then when we sell the property, that's the equity appreciation, and that's where we get a large capital gain on the end of the deal. As a limited partner, you don't deal with property management, you don't deal with brokers, you don't do asset management. There's really not a whole lot you got to do. Who is this for? It's ideal for people who are very busy professionals, and you just really want passive income. You want to diversify your portfolio, and maybe you got some in the stocks and bonds, and you've got it some other places, but you know real estate is a good investment opportunity. You just don't maybe have the time to do it. And so this is a way that you can actually be a real estate investor without having to do any of the work. So this is a fantastic option for these types of people. Now, what about an active investor or a general partner? What is your role there? So you are out there actively finds, acquires, and manages apartment deals. That is honestly, you need to think about it as a job. So anybody who says that they're a full-time apartment investor and it's 100% passive, I'd like to meet them and I'd like to understand how they're doing that because it's actually not that passive. So now you can get into 4 or 5 apartment complexes um, before it takes up, an equivalent to a 40-hour work week. And if you can get into 4 or 5 apartment deals, and you should be able to replace your W-2 income at that point in time. But you are actually doing things. It is not passive. Even when you hire a property management company, it's not passive. So it requires capital. You're going to underwrite the deals. You're going to work with the lenders, property managers, all the people involved. It's much more involved, but the returns are much higher because of the work that you're doing. And this is ideal for professionals who want to build a business. Okay. If you want to build a business in multifamily, this is really the way to go. And this is something that, this was my goal. I was a busy professional, but I knew I wanted to build a business. And so I just started going that direction. So you can absolutely start going this direction, whatever you're doing today, and start working on building a business in multifamily. So with that, which are you, which is really the best decision for you? Should you be an active investor or should you be a passive investor? So is passive investing right for you? If you have a full-time job and you want to diversify your investments, this is for you. If you want cash flow without any of the operational headaches, then passive investing is right for you. If you have the capital, but you don't have enough time to buy and manage a deal, it's right for you. And if you're really looking for a hands-off approach and you want to leverage experienced operators, then passive investing is right for you. Now, is active investing, being a general partner, right for you? If you love doing the networking, you want to do the deal analysis, you want to do the negotiations, then being a general partner, active investing is for you. If you really want to have that full control over those investments, then be a general partner. If you have time to dedicate to finding and managing deals, then it's a good fit for you. If you're willing to take higher risk for a bigger reward, then being a general partner, being an active investor, that is right for you. Okay. So, side by side comparisons, there is no right or wrong answer here. You just have to decide what's best for you. Okay. How much capital do you need to get started? Pretty straightforward answer here. As a passive investor, our minimum investments typically are $50,000 as a minimum investment. Here's why. Um, when we're buying these apartment deals, they are, larger apartment deals. They could be 5, 10, $25 million, and we've got to raise a fair amount of capital. It could be maybe we need to raise $10 million worth of capital for a larger deal. Even a smaller deal, we need to raise maybe $1.5 million. So in order to get there, you can't do it, $100 at a time, $1,000 at a time. You make a large investment. Now, I'm gonna frame this up for you a little bit different. You might, oh my gosh, that's a lot of money. But take a step back. How much money do you need to retire? It's millions of dollars. If you want to live the lifestyle that you're living now, and you don't want to have to cut back in your retirement account, you need to have millions of dollars, not 50,000. Okay. So I get this pushback a lot where, oh, 50,000 is a lot, but no, it's actually not a lot. How much money are you investing in the stock market, the 401k? Your goal is to get two, three, four, $5 million, if not more, working for you. So if this is a better investment vehicle, why would you only invest 50,000? I would suggest you get as much as you can, diversify and invest in multiple apartment deals, but $50,000 is actually not a lot. When you think of it that way, your goal is to get millions of dollars. Trying to get there $50,000 at a time, it's really going to be hard for you to actually achieve your goal of financial freedom. Okay. Now, on the active investor side, the general partner side, you can get in with none of your own money, but you have to be willing to take the time to raise capital. You got to leverage your existing network or go out and network and find new people or hold webinars. And you've got to get people on a call and you got to be able to raise money. And you can absolutely do this. We've done it several times. We've raised millions and millions of dollars over the last several years. So you can absolutely do this. And if you can raise a lot of money, especially your first few deals, then you don't need to bring any of your own money to the deal. Now, I typically invest in my own deals. It's about $50,000 to $100,000. I typically invest because I like to have skin in the game when I do my investments. That's just me. That's just how I bring myself to these deals. So, but if you're just getting started, you don't have to put much or any money into the deal, but you do need partners who have a little bit of money to help you get started because there are some upfront expenses in that. Okay. So there is a difference here. Just want to do one last quick side-by-side comparison of the pros and cons of each role. So a limited partner, what are the advantages? It's hands-free, it's very low risk, and it's completely passive income. The downside of that is you do have less control. But once again, if you're thinking that, oh, I want more control, tell me how much control you have over your investments in your 401k and your stock market. You have zero control. When you invest in an apartment complex with somebody that knows what they're doing, you could pick up the phone and call me and you say, Steven, what's going on with this apartment complex? Steven, what are your strategies to make this apartment deal make more money for us? You can pick up the phone and have that conversation. I guarantee you, you cannot do that with any stock investment. You cannot do it. You can call Fidelity, talk to one of their analysts, but you can't call the owner of some company and say, I need your stock to perform better or what's going on. You can't do that. So even though as a limited partner, you have less control, you have way more contact with the people who are in charge of what's going on. And the other thing, it really depends on performance of the general partner. So, I'm showing up, I'm fully committed. This is what I do full time so that I can make sure everything we do is going to drive the best return on investment for anybody that's investing. Okay. So this is the limited partner. If you're a general partner, the pros are I've got full control. Like I'm the one picking up the phone. I'm handling the asset management. I get to make decisions. So I like that. I like having that level of control. I also get a higher return on my investment. So that's also a really good piece there. Now, let's talk about the cons. It is more work. So if you don't have the time to invest, that's okay. You can be a limited partner for a while, but it is more work. There's more risk because you got to make more decisions, and it does require capital raising, but that's okay. We all do that. So, all right, I from this point, what I want to do is for those of you that are watching, if you think passive investing is right for you, we're gonna drop the link in the chat right now. And if you want to set up a call with me and you want to see if passive investing is right for you, then what I want you to do is with that link we're going to get in the chat right now, you're going to schedule a call. And um Jolene, that is the wrong link. That is the ready to scale link. I think we need the ready to invest link there. If you can get that one corrected. We got it. Okay, hold on a second. Don't use that first link. So schedule a call, and I want you to prepare for the conversation. So what does that mean? When you schedule that call, there's going to be about a 20, 30-minute video I want you to watch, and it's going to give you a nice overview of apartment investing. We're going to give you side-by-side comparison of apartment investing versus investing in the stock market. We're going to talk more about how apartment investing works, our strategies, and how we mitigate risk. But I want you to watch that. And I want you to come with questions. Okay. I want you to come prepared with some questions. And then what I'm going to do is I'm going to talk to you and I'm going to say, hey, where are you at right now? Where do you want to be? What's working for you? What's not? What are some of your challenges and what's keeping you from getting there? And then at the end of it, if I think apartment investing passively is right for you, then I'll show you how that works. And at the end of it, you're going to decide if apartment investing is right for you. And if it is, then we're going to get you on the mailing list and we're going to get you set up to invest in one of our upcoming deals. Okay. It's your decision. I'm just going to help give you the education so that you can make the best decision for you. Okay. So that's passive investing. If you want to, um, if you want to be a general partner, if you want to go and find your first apartment deal, if you're the person that wants to make more money, if you like doing that and you want to be a little bit more involved, then I can help you get into your first apartment deal. But I also know that doing this can be hard and lonely. But if I can help you solve for some of those challenges there, some of the biggest problems of underwriting and raising capital, what would that do for you? And the answer is it would probably change everything. So what we've done is we've created this new school community. We're launching it next week. That is March 17th on Monday. And it is a 6-month program. We've got milestones built in here. I'm going to show you those in just a moment. But twice a week, we're going to meet. We're going to do deal review, Q&A, Zoom calls. We've got a library of over 30 trainings. I was actually just looking. I think it's closer to 40 trainings, and that's going to be on locating deals, underwriting deals. It's going to have a full underwriting worksheet, so you can do the analysis there, and submitting offers. We're going to record all the Zoom calls for you. It's going to be a nice place you can network with others, partner with other people in the community, stay as long as you want, cancel anytime you want, because it's through school. If you want to stay in there for the next 2 or 3 years, you can do that. If you get in there and it's in a month, you're not interested in it, that's fine. You can go ahead and you can cancel anytime you want. So why do we have the 6 months here? And we're going to drop another link in the chat here for you. And that's to get on the wait list because we're launching it next week. So, but the milestones here is month 1, we're going to give you just the core foundations and how to find deals. Month 2, your goal is start underwriting and doing some deal analysis. Month 3, your goal is to have your team built and start doing some networking. Month 4, by that time, you should probably be able to start submitting some offers and maybe even do some deal negotiation. If you get something under contract, month 5, you're doing your due diligence, and month 6, you could close your deal. So you can absolutely do this. So this is the right place for you to get started and start working with some other people. And here's something really cool. We're actually going to enable a referral fee. So we're going to do 20% referral fee. Each referral is going to earn you 20%. What that means is if you were to refer 5 people, this program is going to be free for you. If you refer more than 5 people, you're actually going to get paid. So the way this will work, and you'll see this, we'll talk about this more next week, but there's going to be an invite link, and you're going to have your own link you can share with other people. And if you help get them into the program to go through it with you, you could actually get paid to be in this program alongside of other people. Pretty good deal. So we're going to launch it. This program's going to be $297 a month, but for the first 25 people, it's going to be just $97 a month. Okay. But once we hit 25 people, the price is going to go up. Goes live March 17th at 9 a.m. Pacific. So we got that link in there. I appreciate you guys taking the time. I'm going to stick back for just a few minutes and see if we've got any questions coming up in the chat. See if we got any questions here. Jolene, thank you so much for getting those links in there. So we've got the fast track link, the multifamily fast track, fantastic program. My team actually told me I'm giving it away for too cheap. And I said, that's okay. I want to help some people get into some deals. I want to make some impact. So that's what we're doing for you guys. And like I said, if passive investing is the right decision for you, then I want to help you with that as well. Either way, I'm here to help you. So, all right, guys. Well, I'm not seeing any questions come in the comment section. Hopefully that means we did a great job of covering this. We've got a whole lot of other trainings in the school community, or you can also check us out on YouTube, because we take a lot of these videos, we post them out there on YouTube to help you guys make the right decision on multifamily and get into an apartment deal, because I know it's a game changer for me, and it's going to be a huge game changer for you. All right, guys, thank you so much. I appreciate you taking the time to join. I'll see you guys back in the school community. Be active in the chat, and I really hope I get to see you in the multifamily fast track that we're launching next week. Thanks, guys. I will talk to you later.